Good morning, good morning, good morning. It is Wednesday, the 16th of November, 2022. It's 8:03 a.m. Chicago time. Thanks for coming in. Cold Chicago. Little snow coming in this morning. This is episode number 2359. Thanks for joining me. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, looking at the CT pre-market summary sheet here. Again, you can get this as it drops directly by following Convergent Trading and on Twitter. And you can find it at twitter.com/conv, CONV trading, or at conv trading if you're on your phone's Twitter app. Conv trading, this drops around 8:50 to 8:55 a.m. Eastern U.S. time on a daily basis. It gives you a summary of what's going on, gives you some stats, gives you like the pieces that really kind of help fill in the picture of what the market looks like. And it's prepared by me, myself, and others within Convergent. The market sentiment this morning is mixed overall. We've had a couple of really important events here. We have yesterday, and I'll go through this on the ES chart. Yesterday, we had a news event where two missiles were said to have been fired from Russia into Poland, killing two Polish residents. And Poland is a NATO member, and NATO had warned multiple times at the beginning of the conflict that any attack on a NATO member would involve NATO, and it would trigger off, I think it's Article 5 of the NATO Charter, where all of NATO has to stand up to defend that member. Pretty scary stuff. The market sold off. It was expected to sell off. It sold off anyway, but it sold off on that news. And then what was found out later is that the missiles that went across may have been fired by Russians, but unintentionally landed in Poland due to countermeasures from the Ukrainian forces. And then later it was found out that actually they are Ukrainian rockets that were countermeasure rockets that actually landed in Poland. So it's Ukrainian origin. So a lot happened there. The market came back to the SOC, sort of, and it came back up, not all the way up to where it triggered off. It got pretty close, but we're almost at the SOC of that news event. That was really kind of touch and go, and so that's the main thing. The other thing is Target came out with earnings this morning. Target, a major retailer. If you recall, yesterday we talked about Walmart. Walmart beating slightly. Well, Target's getting its teeth kicked in as it came out and it announced earnings per share of $1.54 versus $2.13. They missed by 27%. Target, this is not a small company, $26 billion, $26.5 billion in revenue. And so they're not a small player, but they basically announced that they're seeing less traffic and that customers are holding on to their wallets. So Target, a big miss, and that's relatively significant news. Lowe's companies announced as well. Lowe's, which is a home improvement retailer, came out and announced it beating by about 5%, $3.27 versus $3.10, $23.479 billion of revenue. We had TJX as well, We still, after the close, we have Cisco Systems expected at 84 cents, and we have NVIDIA, which is a huge player, which is expected at 69 cents. NVIDIA is part of the FANG man. It's one of the ends. The other is Netflix. So this is likely to move us around. Other than that, this morning we got UK inflation year on year. Came in really hot, the hottest in 4 decades, 11.1% year on year in October. For UK inflation, 11.1% was expected at 10.7% was the consensus. Core inflation at 6.5 came in at 6.5, expected at 6.8. Month on month came in at 2% versus 1.7 expected. The inflation rate out of Canada also came out at 6.9% in line. Core inflation 5.8 versus 5.6 expected. Retail sales this morning came in strong, believe it or not. So it seems like Target may be having some issues. We're probably going to see some restructuring, some layoffs from Target because retail sales came in at 1.3% versus 1% expected. So as a sector, retail is doing okay, and we saw Walmart was definitely doing okay, but Target missing, and Target is down. Last I looked, Target was down 17% pre-market, 17%, quite significant. And then for the rest of the day, we have industrial production. We have a lot. Feds Williams, business inventories, NAHB housing market index, which is important. Fed's Bar, ECB's Lagarde, ECB's Panetta. Then we get the EIA numbers, and then we have a 20-year bond auction, not likely to be all that important. Fed's Waller and balance of trade out of Japan this evening at 6:50, and unemployment rate out of Australia at 7:30 Eastern U.S. time. A lot on deck here. So that's that. Whew, that's a lot to cover, right? For the S&P, we've got a balanced auction so far. We have a balanced profile. It's got some protrusions in it. It's got some multiple HVNs in it, but overall, the market is balanced. The S&P is trading inside of yesterday's range. 262,000 contracts traded, which is completely in line with expectations. The inventory is 37% short, meaning there's 37% more volume below yesterday's close than above. The range is 35 points, which is completely normal. And the point of control is at 39.95, which is basically below yesterday's point of control, accepting prices lower. We are actually in the overnight session in the ES. We traded pretty thoroughly the middle distribution. We had 3 distributions yesterday. I'll cover that in a minute. So that's what's on deck for today. You have been informed. A quick look at the expectations yesterday. Again, this is new me. This is old me. One day old me. Let me switch that over. Yesterday, this is yesterday's Trader Bite. Up above, we talked about 50 and 92 being key. I did not draw a scenario here because of the PPI release. There's just no clear way to know what this thing is likely to do next with the PPI, such a fundamental number. So when the main expectation for yesterday is what's drawn here in yesterday's video, which is to most likely turn back and push to the SOC for PPI, which was at 4,008 and a quarter. Let's call it 4,008. I just like to use full handles as opposed to fractions of handles. 4,008. The expectation is we would likely peg 4,008 at some point in the session. And then if we don't bounce from the 4,008, then we are likely to push through into the 39.90 and then ultimately into the 39.85 below. That's down here. 39.90 for a reaction, 90.95, this high volume node right here. That was the anticipated target. Here's what actually happened yesterday. There's your PPI. Quick reminder: orange profiles. These are overnight. Blue profiles, RTH, RTH. Okay, and this is a 1 tick by 8 chart, and the reason you get wider RTH than overnight is because there are more rotations in the RTH session, so you get more bars. So again, this is a 1 tick by 8 point and figure chart. This is what I look at mainly, either that or a 3 or 4 tick Renko. I don't use time-based charts. We open up and then we try to push up into the 40, basically right where the number, the initial reaction on PPI took place. And then we push down and we swing all the way back up. We swing all the way back up. And what we have, we broke the IB low. Very clean IB, by the way. IB print, what we have is just a very whippy, back and forth, choppy, kind of meat grinder type of trade, which I just cannot stand. And so my hands were off the mouse yesterday, just did not see any good opportunities. In fact, I think I had a stop, one or two. I think I had a one full stop out, and then I just stopped trading because I could not see. It seemed like I had some setups, especially this impulse down right here, trading the pullback to mid, RTH mid, and then to have it go almost 98% retrace from the low. To me, that spells trouble, especially when it swings all the way back through and retraces the retracement by another 80 or 85%. To me, that just means the market is just swinging back and forth and it's balanced. And so we ended up with this balanced distribution up above, a secondary distribution down below, and a tertiary distribution at the bottom. So multi-distribution profile with a very clear delineation here at the low volume node, which came into play at the close for a beautiful short setup against the low volume node, against full session VWAP, full session mid, price structure, support. That was a beautiful setup right there. And that's the kind of the only one that I saw cleanly as far as a pullback to continue in the direction of the impulse down. What you see here is the news. This is the missile news into Poland and people dying there. This was anticipated to be a very grave event. We were in the middle of Convergent Trading's trade talk session when that happened. Did not trade this event at all. I think live during the session, I talked about 88 being a decent pullback to sell for continuation. It went to like 92 or something like that, or 90. That would have worked out okay as well. But anyway, I was in the middle of a live stream, and then we finished. We managed to come back. We managed to come back to where the event took place. So the SOC was closed here for the Poland event, and then we closed in the middle of the range with the point of control remaining up top. In the overnight session, we have a balanced profile. It's got multiple distributions, but this is really a balanced profile. Don't make me draw a cigarette on here again. This was a balanced profile, and we're hanging on to this middle distribution. I still see weakness in the way we're lifting. Really, the way we are lifting the offer and price migrates up, I see it being a weak, it's doing it in a weak way. To me, it is really forcefully moving up, so to speak. It is not deliberately moving up. And the way we see that is in the order flow and in the delta. These are very kind of fine, refined observations. I get it. It's hard to trade off of this, but it's a word of caution that every time we push into new highs, it really has a hard time hanging on to those prices. The market is still anticipating a recession. It's pricing in a softer landing now for sure, with the higher probability of a 50 basis point increase in December. And as it says in the CT pre-market summary sheet, the market, the expectation, or ECB's Mueller is favoring a substantial rate hike in December for the ECB, and so I think there's likely to be still a pretty aggressive stance across all central banks. But we'll see. In the overnight session, what we have here is a market that has tried to push higher. The line in the sand early on is going to be right here, right on top of our 4,002. So the 4,002 is going to be really important this morning. We see some big trades coming across here on the sell side and price migrating down. So there had to be bids there for those prints to take place, but price continues to migrate down. There's a fight in both directions. So watch that 4,000, 4,002 area this morning. This will tell us if we manage to make it to this weak-ish high, or if now we are ready to return into the 39.60 below, where I'm expecting it to go, or not. Let's take a look really quick at the relative delta. The relative delta here has been flat on the very large lot in the overnight session. You can see the delta until the European Open. The delta is following the small lots. So the cumulative delta is the blue and red bar chart, candlestick chart. And the dashed line that is orange is small lots. These are 1 lots to 9 lots. The dashed white line are 10 lots to 99 lots. And the yellow are 100 lots and higher. And you can see that small lots were in control. And now the large lots are starting to be in control here. And we're dragging the delta back down. Again, we are either flagging. On a long-term basis, we're flagging. We did break the one-time framing up on the daily yesterday before coming back to 4,008 or 4,010. We did break the one-time framing down. We are in a neutral posture now on one-time framing. So the trend has been broken a little bit, and we are holding, we're holding steady and sideways. So not sure if this is flagging for continuation or if it's making a rounded top. We'll find out in the next day or two, today or tomorrow, what the intentions are. How do we find that out? We find it out by making the high of yesterday and the low of yesterday really significant milestones. So a break below that 39.60 area from yesterday, and it went to exactly to 39.60. Remember, the targets from 2 days ago were 39.67 and 39.60. We got to 67. We went to 64 2 days ago. And then yesterday we got to 60 before the bounce. If we take out the 60, sellers are likely to start taking over, and you're likely to see a lot of long liquidation on the way back down to around, of course, 39.50, but more towards 3800, 3890, and 3850, where we have balance down there. 3850 is the largest magnet in the area on a bigger time frame basis. So that's what we're looking at. Oh, quick announcement before we move on. There's an event today occurring by EdgeClear, hosted by Max and Ian of EdgeClear, with Scott Andrews of InvestiQuant, to talk about how robust is your trading plan. The agenda for this The agenda for this is to discuss, again, this is at 12 p.m. today. The agenda for this is to discuss the ways to create a robust trading plan. I think a lot of people can use this information. Be sure to sign up. The link is right there, and it's in the live chat on YouTube, or you can go to Real Edge Clear on Twitter, twitter.com/Real Edge Clear, and you'll find the link there. The link is myed.ge/robust-trading-plans. Be sure to attend. Scott Andrews is a former discretionary or click trader who became a quant and runs a systems development firm, which does really well, in my opinion. And I think he has a lot to say about how to trade in a robust way. This is something that a lot of traders are missing. A plan. Many people have a plan, but is it robust? Is it something that we can withstand the test of market changes and things like that? So back to what we have here. So again, yesterday, you could see it here. We took out the low of the prior session. So yesterday was an engulfing day. We started above, we pushed below the prior day, and then we finished right dead in the center of this thing in the 4,000 MCV POC. 4,000 again, I'm going to say it, 4,000, 4,002. Very important early on today. We want to see what it does this morning with the 4,000. If it does not retest 4,000, it's weak. I'm going to trade from the short side. And then if we do trade from the short side, we have single prints all the way down to 39.39. That becomes your key target. This is 39 right here. And then we clear, we need to clear the 20 to 24 area, 20, 24. And if we, this is where the market's expected to bounce and remain up here in the 39, 40, 50 area. If we clear the 2024 today, then it's a very quick path down into 38.90 and 38.50 below. This is how things are shaped. Here's the big picture. If we look back, we have this big MC VPOC right here at 39.50. This is the magnet down below, the first magnet down below, and then the second magnet is 38.50 that I talked about just now. And you can see that it's been transitioning up, but it's slowing down. It's slowing down. These closes are kind of slowing down. So what we're likely to see is that the market is likely to facilitate trade to the short side relatively more easily. So what are we looking for today? Primary scenario. I'm seeing the S&P is weak. I'm looking for an open auction that breaks this double bottom here, that breaks the double bottom, is responsive, moves back towards, oh, sorry guys. These indices look all the same. We were talking about RTY yesterday afternoon. Sorry about that. Waiting to load. It's too bad because there's a ton of ticks here. Let's use this chart. Release. Release the hounds. So we're going to use the active chart for this. So week low right here. Open auction. Expecting it to break the low on the open. Expecting it to respond. Come right back into this 4,000 area, and then I'm expecting it to give in at least in the afternoon and start shifting lower, 39.60 down into the 39.50 area, bounce around in here and finish sideways. Not expecting too much to take place in today's action. Secondary scenario, we open up, we test below, we are unable to hold on to lower prices, looking for an impulse higher, a strong move higher. into the open, sets up a base, test to 40, get above 40, pull back to 40 or 4,000, and then start to move towards yesterday's point of control. And then this sets us up for another day of pushing to the 40.50 up here, 40.50, and then we're back to 40.91, resuming the rally to 40.91. This is the less likely scenario. As I said, there's a lot that looks like the pushes higher are weaker in a participation. So I'm looking for this thing to roll over and get back into the 39.50 zone, and I expect it to rest down there. Okay, those are the key plays for today. Good luck, and I'll catch you tomorrow morning. Take care.